This is the chart of EURUSD. We are looking at the daily chart, the 3 time frame. What we want to do, we want to know what to do today, as in we want to know in what direction should we follow today in placing our trade. Now, before anything, we have to determine the trend on this chart. So let us we can use several methods to determine the prevailing trend. We can fix moving average. Moving average 200 is 200. Set the parameter to the period to 200. That is a very powerful setting for determination of a long-term trend. So you can see now that the price is moving well above this moving average. So the trend here is bullish. Anytime the price is moving above the moving average 200, we say the trend is bullish. If it is moving below it, it is bearish. So what we have today is a bullish trend. Now let me press Ctrl Y to bring the separator, this period separator. So from here to here is 1 month, from here to here is 1 month, from here to here is 1 month. Which means since the month, this is month of June, this is May, and this is April. So we have been bullish since April 2017. Now what we are going to do, since we have determined the trend, is to draw our trend line. Trend is bullish, so let's draw the trend line. Drawing the trend line, we join this swing low to this swing low. So from this place to this place, swing low to swing low. You know, in an uptrend, we usually have rising swing lows, which means the most recent swing low will be higher than the previous swing low. So we can connect the two, and then we have a positive slope. This is a positive slope, straight line. Now this is our area of focus now. This is today, which is forming, and it's a red candle. The color is red here. This green candle is what happened during, today is Monday, so this was Friday. See that the price was actually moving down, and eventually when it got to this trend line, it encountered a support. So we have a trend line support around this place, which did not allow the price to fall lower. Then we have a resumption of the trend here, which is being confirmed by this green candle. You can see that the price failed to close below the trend line, right? And then it stopped here to close above it, which means the sellers were unable to break the bullish phase. They were unable to carry the day. So the trend that we have is still bullish. Now so this was Thursday. Now this is a Friday candle, which is the last day of the week. That was last week. The buyers took over the market. They bought big time, and the price was able to close well above the trend line. So we have a bounce off the support, which did not allow the price to fall successfully below the trend line, but rather closing above it. So now our next focus is we are going to take this as a candle of interest. So we are looking at what happens to this candle today. Now we have movement above the high of this candle. The candle actually has 1.1201 as its high. Why this candle here, today's candle, has already made a high of 1.1208. This was 1.1201 and this one already made a new high. So whenever we are having higher high, then that means uptrend is confirmed. So we are good to buy here. Buy this pair now, considering this particular setup at any point in time. So we are good to buy. So this is a good setup for buying. Now we can also go to my pivot point analysis. EURUSD pivot point. This is the major pivot point for the monthly chart. So the price is still moving conveniently above the pivot point. So we still agree that we are in a bullish trend, uptrend. So let's go up a little and see. This is the next pivot point, monthly pivot point resistance. So we have 1.1393. So which means when we buy here, we either place our profit target at pivot point resistance, which is 1.1393, or we place it at the price resistance itself, which is the high. This is a resistance here. The highest point here is 1.1283. So we can target 1.1283 or we target 1.1393. The target is not very important. What is most important for a trader, a serious trader, a sensible trader, a trader that trades in a way to protect not just his capital but also the profit. What is most important first is the entry point and the stop loss. So we place our stop loss in a convenient place. Since this is our setup bar, this is our green candle that gives us the signal that we have resumed. This is what gave us the signal that we have resumed the uptrend again. So we are going to place our stop loss probably below it, and if it is too large, we can switch down to 4-hour time frame. Switch down to 4-hour time frame. Then we can place our trade based on this chart now. Okay, so that at any point in time we can place our stop loss below this swing low at 4 hours. Now let me go back to the daily time frame. So if we buy this pair, let's say we buy at now the price has moved down to 1.1195. okay, that's 6 pips below the high of last week, Friday. So I will try and see if price can fall any lower again, and then our next effort is to buy at a convenient point. Some traders like me, I like to use 50 pips as my stop loss, but the most important thing is that I have to make sure that I'm buying at a very low price, so that I will have a very small risk. So once I've done that, I don't set profit targets most of the time. What I do is I use trailing stop. I use a trailing stop. Trailing stop is very good because it helps you to protect your capital as well as the profit. So that if there is any sudden move in the market against your position, you will still have something good to go home with. Alright, so the conclusion of today's analysis is that this pair is conveniently in uptrend, but any close below this pivot point, which is 1.1116, any successful close below it will change the direction of our analysis, to switch our analysis from uptrend to downtrend. But for now, in as much as we are moving above the pivot point, we are still bullish. In fact, we have been bullish since the month of May. Right, that's all that we have on this pair for now. The week is still very young. If there is any new development, then we have to update our analysis. Thank you very much.